So now on to our session. Today, I'm hoping we can have a conversation, a practical one, where we are reflecting on real examples, experiences, and solutions to the climate crisis. To achieve our global ambitions to tackle the climate emergency, we all know large sums of money are needed. As Amit mentioned, too often we've been fixated on finding that one single silver bullet solution to our climate goals, but the emergency is too urgent and too great. We need many solutions at the same time. For those of you who read the January 2021 report of the Task Force on Scaling the Voluntary Carbon Market, you will have seen that they suggested that a market of 1 to 5 gigatons of CO2 emissions by 2030, with perhaps 2/3 directed at nature-based solutions, meaning that tens of billions of dollars of investment in nature-based solutions are potentially at stake as a contribution towards this global emergency. Nature-based solutions to climate change, sometimes called natural climate solutions, involve conserving, restoring, or better managing ecosystems to remove carbon dioxide from the atmosphere. Some nature-based solutions, such as conserving existing wetlands, serve mainly to prevent greenhouse gas emissions. Done right, these investments can accelerate the solution to climate change and hugely improve the protection and enhancement of nature. So this session will feature practical examples of such investments. The speakers we have here today are leaders and experts in the field, and their experiences and insights are meant to serve as an inspiration to you all in tackling the climate crisis. Just a note on our makeup of our panel. We are globally represented. Diversity is important to us at the GIN in addressing these challenges for the benefit of all. And we are grateful to have speakers with us from around the world who will be speaking about the innovation in their own local context in ways that are relevant to all of us. So, speakers for the session. Charlotte Kaiser is the Managing Director for NatureVest, the Nature Conservancy's Conservation Investing Division. Her team has helped Nature Conservancy and its partners originate, structure, fund, and close investment vehicles representing more than 1.3 billion of committed capital towards conservation. Gautier Quéru is the Investment Director and Head of the Land Degradation Neutrality Fund, which is an innovative fund co-promoted by Mirova, the responsible investment management company of Nataxis and the United Nations. The 150 million US fund is dedicated to long-term investments in sustainable land use projects and nature-based solutions. And finally, Vidya Chandy is the Vice President of Impact at Chiratae Ventures India Advisors, which is one of India's largest and oldest tech-focused VCs, currently advising 700 million assets under management. So with that, let's get started. Again, the topic of this breakout is nature-based solutions. So I'm going to kick this over to all of our speakers with the first question. And what does this mean for your organization and the work that you do? Tell us about the innovative approach that you take to nature-based solutions to climate. And Vidya, I'm going to start with you. At Chiratae, one of your current areas of focus are what you call climate smart investments. So how do you define these investments in the context of your strategy? And can you give us an example of a company that stands out as an example?
Thanks so much, Kelly. And firstly, thank you to Jen for the opportunity to speak today. It's really exciting to be on this panel. So when we look at it, and a small correction, we are at $900 million in terms of assets under management. We're investing across several sectors, and agriculture is one of them. And we are seeing rising interest in climate smart agriculture. And I thought today it would be most relevant for me to speak about what we are experiencing through one of our investee companies, Cropin, in terms of what's on the ground, what's the outlook going forward, and the areas that will excite us in the future. So Cropin is a B2B agri-tech company. It's a full stack agri-tech company that has two platforms, which leverages AI as well as satellite data to both transact as well as offer insights to all stakeholders in the agribusiness value chain. It's currently operating in almost 60 plus countries through two solutions: Smart Farm, which offers end-to-end farm management, and Smart Risk, that uses satellite images to measure yield and provide underwriting information for certifications and financial products. It is involved in several sustainable and climate smart agriculture projects worldwide. Now, when we look at nature-based solutions in the context of agriculture, I think it's important to see what has, and through Cropin's eyes again, how has conservation agriculture played out in this geography? Well, as a B2B technology company, they're seeing varying adoption across clients and regions. From a global perspective, climate change has been impacting most farmers. And a lot of development programs are using newer initiatives. For example, in Africa and Mozambique in particular, cashew nut is a stressed crop. And Cropin is working with the value chain there in Mozambique, to look at the issues. And in terms of geographical differences, what we see is that developing world, the resources are more stressed compared to the European Union, for example. And there is more interest to optimally produce and sustainably grow as much as possible. In terms of commercial organizations, smart farms advisory services are being used, and organizations have their own recommendations, and they're looking keenly at climate smart agriculture, especially in areas that are facing the brunt of climate change, and learning how crops are behaving. And it's an iterative process because it's all fairly reactive in that sense. And when you look at nature-based solutions and conservation agriculture in particular, there is some, but not I would say, commercial interest at scale, but wherever there's a coalition or a supply chain demand for it, which is involved in terms of reducing greenhouse gases from agriculture perspective. Example with clients like Nestle and PepsiCo, and as part of their sustainability goals. So I think ESG also plays a big part there. And coming to some very specific examples of what's happening on the ground in India, where we are based and where Cropin is headquarters as well. Conservation agriculture, some of it is part of our traditional practices and others are less prevalent. So there is a fair bit of variation in what we are seeing. If you take crop rotation, yes, that is definitely being practiced. If we take cover crops between main crops, it is dependent on the customers and specifically with development agencies. If you look at improvements in water management practices, for example, with rice cultivation, again, there is promotion for sustainable practices, and they have seen larger uptake in terms of scaling with governments like in Punjab. Flood and drought management is something that a company like Cropin and through its satellite technology can do extremely well. And that's being used heavily in terms of weather advisories. Development of drought tolerant crops. This is again, very customer based and it depends on their interest and uptake. Definitely the government's promoting this in areas like Bihar and Madhya Pradesh. And from the perspective of livelihood and improved grazing and animal management techniques, these are bundled in as part of sustainable livelihood projects, which are linked to rural livelihood development missions in terms of boosting non-crop income. And specifically, the governments in Madhya Pradesh and Bihar are involved. I would love to talk about what Cropin is doing also in terms of the coalition. They've joined a newly formed coalition for the decarbonization of European food systems. It's a World Economic Forum catalyzed European Carbon and Farming Coalition. And it's part of the emerging food and nature platform, which is called the 100 Farmers and 1 Billion Consumers. But I'll take a pause here, Kelly, and perhaps we can touch upon this later when we're talking more about the solutions.
Thank you, Vidya. And yes, and one thing I will want to come back to is your point about sort of the win-win with livelihoods as well. Gautier, I'm going to turn to you. In your role at Mirova, you have done some really interesting agroforestry projects. Can you tell us about one of these investments and what makes it a powerful way to address the climate crisis?
Sure. Yeah, thank you, Kelly, and hello, everyone. Thank you very much for having me. Happy to participate. And indeed, at Mirova, we have committed significant resources, human and capital into this nature-based solution investments. And we see they can deliver a real tangible environmental and social impact, as well as interesting financial returns. And an example I would like to share with you is a program we're supporting in Latin America called Gautier Sustainable Land Use that is managed by a great operator called Gautier. They are actually working with cooperatives of smallholders especially in Peru, Colombia, in areas that have been facing deforestation for decades. And now they are reversing the trend. And actually, Gautier is working in partnership with the cooperatives to help them develop certified supply chains, especially for coffee. So I'm speaking of organic and fair trade certified coffee, and providing the financing needed to replant degraded areas, deforested areas with agroforestry systems, providing also not only the funding, but also the technical assistance to improve the agronomical aspects, producing more with less in a sustainable way, and providing additional revenue stream by not only planting and producing coffee, but also processing the coffee by funding processing units, mills that can transform, dry the coffee and sell it at a higher price with a higher margin that is often taken further downstream by intermediaries and now is taken at cooperative level, and also gets registered under carbon credits mechanism to namely the VCS, the Verified Carbon Standard, to bring additional revenue. So together with production of coffee, transformation and carbon credits, Gautier has designed a very interesting model that is really providing interesting social impact by onboarding local communities, smallholders, and providing additional revenue for all the farmers, environmental benefits by restoring degraded land, having more resilient ecosystem with agroforestry, and also preventing further deforestation, and financial returns by combining these different revenue streams. And it shows that nature-based solutions should encompass the various dimensions to be very meaningful, impactful, and successful. And this is what we really like with this project, just to give a first example.
Thank you, Gautier. And as I think the audience is starting to hear, a lot of these solutions are multifaceted, as Gautier just said, multidimensional. And I think what's particularly interesting about this is that as we look to nature-based solutions as a replicable model for the future, you can start to harvest or see the ability to harvest a lot of different positive outcomes. On that note, Charlotte, I'm going to turn it over to you because you have a great example in the US about sort of a win-win-win in terms of biodiversity, climate, and helping sort of an aging fossil fuel-based economy reinvent itself. So if you can tell us more on that front.
Absolutely. And it's great to be with you both, Vidya and Gautier, and thank you for having me to the gin. My career in impact investing is about as old as the gin itself. And it's just remarkable to see the growth of this industry, and in particular, and really gratifying for us to see institutional investor interest finally emerging in climate, and in particular nature-based solutions to climate mitigation, and a growing understanding of the biodiversity risks to the capital markets. So yeah, NatureVest is now 7. We were launched in April of 2014 with founding sponsorship from JPMorgan Chase and support from another number of other foundations. We're a philanthropically funded deal team operating inside of the Nature Conservancy, advancing our mission of protecting biodiversity and tackling climate change with investment vehicles. So we structure transactions and then raise outside capital into those deals to support our mission. And our portfolio, as you said earlier, Kelly, is about a dozen deals now, structures ranging from joint venture operating companies to mezzanine debt to private equity vehicles. And we've raised about $1.3 billion US in outside capital to support conservation. So yeah, I'd love to talk about one example, which we launched about 2 years ago now in Central Appalachia in the United States. This is a very important part of the world for both climate resilience and biodiversity conservation. The Appalachian Mountains and the forests there represent incredibly important migratory corridors for species as climate change occurs, as well as very high areas of biodiversity and endemism for species. The Nature Conservancy has been working in this region for decades, and our science has targeted a portion of the region along the Cumberland Trail in Appalachia as really high priority. So using investment capital, we were able to secure 250,000 acres or about 100,000 hectares of working forest right in those hotspots. Raising about $130 million in debt and equity and acquiring 2 different parcels from investment managers, which we are now managing as the general partner in the Cumberland Forest Project. So the Nature Conservancy is the managing member of the GP. We have about 24 LPs, and we're managing not only for working forests and moving everything to FSC certification, but also for biodiversity and for carbon sequestration. The projects are, or the parcels are enrolled as offset projects in the California carbon market and are generating about 5 million tons of offsets over the 10-year life of the fund. What's exciting, as you noted, Kelly, about this is also the livelihoods component. This is a region that's transitioning away from the coal economy, and we have also created a community development fund with the mineral leasing revenues that we're still receiving in order to provide loans and small grants to businesses transitioning out of the extraction economy in the region. So it's really, as you said, a win-win-win for people and biodiversity and climate.
Great, thank you, Charlotte. One area I want to come back to for everyone is, so everyone sort of talked about, okay, so there's dynamism in terms of the impacts of these particular investments, but there's also something really unique in terms of the composition. Specifically, we've started to touch on the carbon credits side of this. And I'm going to come back, Gautier, to you to kick this off, because I'd like for folks to understand a little bit more about how, when we are talking about structuring this type of investment for climate, there's sort of a unique model here in terms of how we look at revenue and on top of the investment strategy. So can I start with you?
Sure. Yeah, I can elaborate more on this structuring financing model with carbon credits, right? It's what we're looking for. Yes, indeed. Just really also as a quick background, I've been working in the field of carbon finance for many years. I started in 2004 when, under the Kyoto Protocol, there have been I would say, first wave of really carbon finance development that then stopped a bit around 2011, 2012 at the end of the Kyoto Protocol period. And then we had to wait until the Paris Agreement in 2015, and more recently with more commitments to net zero, to see a great momentum in that space. And basically, a lot of the carbon market these days is more on the voluntary market, with demand coming from corporates committed to net zero, to carbon neutrality, and willing to, in addition to reducing their own and direct and indirect emissions, to purchase carbon credits. And actually, these carbon credits are really reflecting, under specific methodologies, the amount of tons of CO2 equivalent that is either avoided or sequestered in given natural assets, as we are speaking today. So it's either agriculture or reforestation, restoration of degraded land that can capture carbon in the biomass, in the trees, in the land, in the soil, or avoided deforestation or degradation under a mechanism we call REDD+. And basically, through measuring, monitoring these avoided emissions or sequestered emissions, we can verify this and then get carbon credits which can be monetized and unsold. And basically, this creates a revenue stream that can be leveraged to structure a debt investment, an equity investment that will then capture these cash flows. And we can then use project finance techniques, commodity finance techniques to tailor really the financing instrument to this cash flow profile. And what is interesting these days is that we see really a boom in this market with stronger demand, meaning higher prices in the end. And so projects that so far were not always suitable for private investment because they were not commercially viable are now becoming viable. And it really opens new territories for further funding. And maybe also to keep it short, but for the past years, the vast majority of carbon credits issued and related transactions were mostly on REDD+ and on forest carbon. And we see also new territories of carbon coming up, what we call the blue carbon, coming especially from the protection or restoration of mangroves and linked with marine ecosystems, or also the soil carbon linked with increased carbon capture in the soil through especially regenerative agriculture practices and so on, that are becoming more and more attractive with the market being developed. So this is really encouraging. There is a lot happening, many players joining the market, and so it requires a mix of innovation to adapt financial instruments to these assets, as well as standardization, sharing good practices. And this is why it's great to have these types of events to share views and help build a real sector to allocate more resources to these important solutions.
Thanks, Gautier. Vidya, I want to kick this over to you. What does the financing structure look like? Gautier was also talking about just like the soil and the regenerative aspects of it. And I'm curious, how you consider this in your particular context as well.
Sure, Kelly. So from our perspective, we invest in agri-tech companies with a focus on productivity and financial return. So in that sense, my response will be slightly different. We don't go in necessarily with the intentional objective of climate smart agriculture or nature-based solutions, which is, in my view, is a little further out. So I think what's important for us really is to look at how do we chart a path from here to where we as an industry see this headed and where we want to be, right? So far we measure, for example, we measure uplift in income, which is the true north for, what we want to see happening with farmers. And for them to go from, I would say, productivity to conservation agriculture or nature-based solutions, I think there is a transition risk that needs to be taken into account. How do we model for that risk? How do we design for that risk? And what are the right kinds of incentives for them and for other players in the value chain, whether they're agri-biz companies or whether they are investors like us? And some of that needs to come top down and some of that needs to come bottom up by keeping the farmer at the center, and top down as well from the value chain of capital in itself. So we haven't yet seen that kind of tipping point for us to actually make this the center of what we do as a thesis, but we're watching the space closely. We made a start by looking at income generation for farmers, and through work in the coalition and through crop-in and through events such as this, we ourselves are growing in order to be able to take, participate in the new economy.
Great. And Vidya, you just teed up two things that I'm going to want to come back to in a minute. One is around incentives and one is around measurement. But Charlotte, I want to give you a chance to comment on this as well, because although the focus here and the potential around sort of the carbon credits aspect, it is we've all kind of touched on the dynamism of the the different ways of structuring finance for these deals. So can you talk about that a little bit in the context of the Appalachia project?
Yeah, absolutely. And I would just echo what everyone has said here, which is this can only be one piece of the puzzle. And indeed, when you look at the economics of our deal, the foregone revenues from the reduced harvesting that we're doing in order to generate the carbon credits are not totally compensated by the revenues from those credits. And we're selling into the compliance markets where prices are, typically higher. And so that's a challenge. And there's been many an op-ed in the last 6 weeks about the carbon prices needing to be higher. And I would say that again here for this audience as well. So because we're the Nature Conservancy as well as a transaction team, we're able to leverage relationships that we have as a public charity that a traditional investment manager wouldn't. And as a result, the deal that we did is structured, I think, fairly uniquely, which is to say, of the 130 million, about 40 of that is debt, 20 from the Doris Duke Charitable Foundation, which made a direct program-related investment loan at a below market rate to the Nature Conservancy, which was then on lent into the fund. And then also from the Virginia Resources Authority, which is the state revolving fund, investing in clean water infrastructure. So a pretty innovative investment on their part to support clean water via green infrastructure, i.e. forest protection. But also likewise a direct loan to the Nature Conservancy, which we then on lent into the fund. So we're able to access kind of blended capital that I think traditional investment managers may not be able to. And I do think there's a lot of room for those blended capital providers to be thinking creatively and innovatively about how to deliver kind of the public goods of biodiversity and carbon sequestration through these blended structures.
Thank you. So I want to now, this is a great segue to come back to the conversation about kind of incentivizing solutions as well. Vidya, you started to touch on this a little bit. And so I'd like to start with you. What are the sort of incentives that are available? And is there a role for more to be done on this front to really spur more capital going in this direction?
Yeah, absolutely. There is definitely room for more. See, what we have seen work are projects which involve the government and which involve development agencies. And in some cases, there is commercial interest where factors such as sustainability goals and ESG, as I mentioned before, have a role to play. So I think that's a great way to engage, the larger companies. But to Charlotte's point, I think blended finance has a good role to play here as well. In India, we've seen success for social impact bonds, for instance, in other sectors. And as far as conservation agriculture is concerned, I think we'll definitely need structures such as that to create the market and to build solutions, which can offer successful models that can then again be scaled both via government policy and through capital infusion. But first, we have to experiment with solutions and find out what works in terms of the incentivization itself. At the end of the day, it has to be economic, it has to be practical, and it has to have an ecological benefit to the farmers. So stay grounded on all these fronts. The role of patient capital, as well as involving development agencies and governments, which have a focus on both productivity as well as conservation, can't be stressed enough. And that is what's going to help build the market out.
Thank you. Gautier, I want to take this to you as well. When we think about the context of, in South America, can you talk a little bit about the incentive structure there as well? And just picking up on some of the points that Vidya mentioned.
Yeah, I mean, what we see these days is there are two dimensions, I would say, for the incentive. It's coming from the public sector and from the private sector. From the public sector, what is interesting is that there have been for a few years now, more and more public policies related to protection of nature and to climate solutions under also the nationally determined contribution of the Paris Agreement that are then translated into more comprehensive legal frameworks to support projects that have positive impacts on the ground, and this is really happening. And Colombia has been, for instance, a leading country recently in this respect, with the promotion of sustainable practices in the land use sector, and potentially tax breaks and other types of support can really help sustainable land use practices, sustainable forestry and agriculture in this respect. But what is interesting is that private actors, private markets can help also incentivize projects to adopt good practices and have in turn positive climate carbon benefits. We discussed the carbon credits, but there is also this certified commodities and value chains that can play an important role, where especially in forestry sector, Charlotte mentioned FSC certification. There is also Rainforest Alliance, UTZ certification, many interesting markets and value chains where there is growing demand for certified products that can drive price up and then create the incentive. And this doesn't require any regulatory specific action. It can be done with voluntary commitments from corporates, from off-takers, and then can be beneficial to the operators on the ground. And of course, this can be combined. We can have, for instance, in Europe, there are ongoing discussions to prevent what is called imported deforestation, and this can be supported by recognizing certifications such as FSC, Rainforest Alliance I mentioned, and then can help these projects that are certified get access to wider market shares, better prices, and create a virtuous cycle. So instead of reinventing new schemes, just reinforcing existing good certification to further develop the market.
Thank you. And Charlotte, obviously the same question, how is this playing out in the US, and how does that structure sort of affect the work that you're doing?
Sorry, how is which piece playing out in the US?
I'm sorry. The incentives. How are incentives sort of playing out for the type of work?
Oh, I wish there were more, right? I mean, I think the real challenge in particular in the United States is that investors, other than kind of their own thoughtful view of the risks, market trends, there are no kind of formal incentives to invest in climate mitigation or biodiversity mitigation. And my banking background is in community development investing in the United States, where there are a couple of really powerful pieces of regulation that drive capital at real scale into public goods like affordable housing and small business lending. And we don't see that analog in climate and biodiversity. Things like TCFD and TNFD are starting to build awareness.
Can you spell out those
Sorry,
acronyms
Task
for
Force
folks?
on Climate disclosure mechanisms around climate and nature are helping investors understand and assess risk better. And I really echo what Gautier said, that there's plenty of good certifications and metric mechanisms that do work, but because they are kind of scattered and diverse, it is challenging for investors not to feel overwhelmed by a set of regimes that can be hard to kind of synchronize. So I would say we need more in terms of regulatory support and incentives. But at the same time, it's exciting to see particularly institutional capital increasingly lean in to better understand and invest against these opportunities.
Great. And you mentioned and touched on obviously some of the regulatory points, but also I think obviously one of the big questions here is around so how do we know? Carbon is such an abstract thing, and when we talk about some of the incentive structures, when we talk about credits, when we talk about sequestration, we talk about all of this, it obviously is predicated on our understanding of the actual potential, the climate addressing potential of these projects. So Charlotte, can you talk a little bit about, I mean, obviously the Nature Conservancy has a very good handle on, on the measurability side of things and understanding conservation at a deep level. Can you talk a little bit about, from your perspective, how do you measure this? What tools do you use? And I'm gonna go around because, obviously, as you also touched on, there's a bit of a scattering here, right? And there's an interesting dynamic right now with measurement and regulation and so on going on in the world. So Charlotte, over to you on this.
Yeah, no, I mean, it's not simple. And it becomes even more complex when you're talking about biodiversity. And thankfully, we're talking about climate today. At least in biodiversity, at least in climate, there's a currency, right? A ton of CO2 equivalent. But the science behind, the science behind kind of sequestration by natural systems is surmountable. And we can get our arms around, how a mangrove forest behaves, or how a pine forest behaves, or how a coral reef behaves. What's really tricky is understanding kind of questions around additionality and leakage, which are terms that get thrown around a lot, but really, what would have happened otherwise, and what's happening as a result of this intervention. It's been, a source of some scrutiny by the Nature Conservancy. We're looking closely at the projects that we're doing to ensure that we're adhering to the highest standards on those fronts. But it's hard for investors who are used to very cleanly underwritable cash flows from sales and other really obvious economic activities to underwrite the economic value of an environmental asset when there is a great deal of sort of collective storytelling and shared understanding that needs to go into the support for those revenues.
Right. Vidya, I'm going to come to you. I know that you've thought a lot about impact. And so I would love, to hear from your perspective, what tools you're using, how is this being measured, and how are you using that measurement to really understand, the potential and the real results?
So, as I've mentioned in several forums, we are very closely participating with GIN and using the IRIS Plus metrics, as well as contributing towards that. So I know it's a fantastic resource that is built, to stay with and ahead of the market. And there are definitely, things that one can utilize from there. As I mentioned earlier, we are not measuring climate smart agriculture outcomes from a carbon perspective. We measure on the productivity side. So I think moving towards that will require us to move with the market as well, in terms of, certain investments that we make specifically in that area where this would come in. That said, there does seem to be a lot of complexity and load on investee companies as such, because there are so many different kinds of metrics and certifications, et cetera, that are being required. So I think reducing those complexities will be required. From an India and regulations standpoint, we've recently got, for larger companies to report more on the ESG side, but there's nothing really from regulations for companies to report in this specific area. So we're still far away, but as there's a groundswell from Europe or the West, I imagine that will also change over here. On the certification front, what I'd like to add as well, and the other panelists made good points on the certification, is that technology obviously has a promising role to play as well. So Cropin's role in the coalition is that of a digital partner. So they are undertaking technology-based certification for the projects that they're experimenting with.
And Gautier, obviously, we're talking now about how to really track the solutions, and with your background, obviously you thought a lot about the financing side, and obviously the measurement component. How much CO2 are we talking about? Is an important element to that. So can you talk a little bit about your criteria for measuring impact? And really, I think some folks in the audience are really interested actually getting to the tools level. So if there's anything on that front that you have that you can share, that would be great too.
Sure. Yeah, I mean, there has been a lot of developments and activities around measuring impact in the field of nature-based solutions and sustainable land use over the past years. And we're working with multiple stakeholders, the UN, the WWF, and other NGOs and research centers to also help and converge on the metrics, on the KPI, and so on. And beyond, I would say, traditional KPI for impact related to, carbon sequestration, number of hectares of land under sustainable management, also decent jobs created, percentage of women, not only in the workforce, but also in the management roles, and a lot of, traditional impact KPIs. We have been working also with the UN on interesting indicators to measure the reversal of land degradation. And actually, under the Sustainable Development Goals, and I don't want to enter into too many details, but it's also a very scientific approach I can relate. SDG 15.3 related to land degradation neutrality relies on 3 sub-indicators, which are land cover, land productivity, and soil organic carbon. And if one of the 3 decreases over time, it means that the given land area is undergoing degradation. But if the 3 are stable or increased, then there is a real reversal of this. And the good news, and it's true for many other KPIs, is that there are more and more remote sensing satellite data to provide very good proxies with more precision to measure this over time. So the costs related to impact measurement are also reducing significantly with this technology. And I think this is very encouraging in the future that we can ensure that the impact investing sector is going into project for which we can really verify the positive impact. And this includes carbon monitoring as well with these technologies. This is what I could share today.
Great. So I'm going to shift a little bit. We're getting some amazing questions coming in from the audience. So I'm going to do my best to start moving these around for folks. But I want to shift a little bit to kind of 2 sides of the same coin. What is success and what are some challenges? So Gautier, I'm going to put this first to you. We've kind of talked a lot around these specific projects. We've talked a lot about, the financing models and, the ways that we're looking at the potential from a climate perspective and or, Vidya, in your case, how you're sort of looking at this from like a near term to longer term perspective. But I want to talk about, because we're talking about climate, what does success for projects like yours, what does it look like? How do you define that as an investor? And how, what are some thoughts for the audience when really thinking about kind of scoping out what you're trying to accomplish? And Gautier, I'd like to start with you.
Okay. Yeah, so what does success look like with these types of projects is definitely a transformational change locally. Is that we are really transforming unsustainable local practices related to land use in particular into more sustainable ways. And it's not only because we are there to check that it is made, but because local communities have adopted and also decided on adopting these new sustainable practices. And that's beyond the term of our financing. That is often long-term, but it's hard to get funding beyond 10, 15 years. So it means that beyond that period, the good practices will continue because it is in the interest of local communities to continue these good practices. And this is why it's important to provide long-term funding to help really accompany this transition, not only for a few months or a few years, but for many years. And that together with technical assistance, with funding, we can provide also technical assistance to empower really local operators, local communities, so that they master the good practices, and that is co-designed. But yeah, it means that this long-term viability and this long-term resilience of land use is the key success that is enabled by long-term funding and technical assistance, the two legs of meaningful impact funding, as we think.
Great, thanks. And Charlotte, I want to pose the same question for you. You know, success in the context of, you know, obviously of the Appalachian project that you're talking about. What does that look like, again, from a carbon perspective? What does that look like in terms of a replicability perspective?
Yeah, for sure. So our goal here is to sort of set a new bar for what sustainable forest investing and forest management can look like. Our term for it is climate smart forest investing. And so success is not only kind of hitting our projections in terms of carbon sequestered, we target 5 million tons, and rates of return, we target commercial rates, but also, you know, to see others trying to do the same. And we're in fact in negotiations with a potential partner on a portfolio of forest investments where we bring the same management practices at a much bigger scale. So we're already seeing that replication begin to happen, but we really want to see kind of others come along and sort of do what we're doing.
Great, thanks. And Vidya, for you as well, you know, you've mentioned a number of times sort of the journey, you know, from where we are now to how, you know, things are evolving. How does that look for you in terms of success with this particular investment? But just as you think about the portfolio of you know, of crop and type investments in general.
I think in the long-term success for us would mean that this has transitioned to the mainstream, and there's a lot between here and then that needs to happen, which we've touched upon. But essentially, it needs to be economically and ecologically viable for the farmers and viable as well for all ecosystem players. And it doesn't remain a niche in the agriculture space, that it goes commercial, it goes large scale. I think that would be true success. And that's what we should aim for in terms of all the experimentation, incentivization, and all the other steps that are required to be done to get us over there. And not to forget large investments that will allow us to provide the necessary infrastructure and to support the ecosystem, the technology, the knowledge dissemination, and everything else that is required to overcome the short-term risks and build the evidence out.
Great. So as I'm doing some quick mental math, you know, Charlotte, on some of the numbers that you were using for the climate, the carbon portion of this, you know, and Gautier and Vidya, I'm putting that into the context of this big number that we kind of kicked off this conversation with, the 1 to 5 gigatons of CO2 equivalent by 2030. And so the big, you know, sort of elephant, as it were, in the room, obviously these are just, you know, singular examples. But Vidya, you just talked about scale. And I'd love for you to all kind of comment on what will it take when you think about, again, the models that we're talking about right now as sort of promising examples for the future. What will it take to help really scale these types of solutions to actually meet some of those big numbers? I mean, the market sounds, you know, fairly large, but 2030 is right around the corner. I'm going to start with you, Charlotte, on this one.
Well, I'm going to say something maybe heretical, but these kinds of investment opportunities are not going to be what get us to the number. We need to stop burning fossil fuels. We need to transform our economy. And I think what Gautier and Vidya and I and our teams are trying to do is invest into the world that needs to exist. But this is not enough. And I think, you know, showing that the economy will thrive in that new world is a really important piece of the puzzle, but it's only one piece.
Thanks, Charlotte. I like the counter points. Gautier, do you want to comment on this and build on Charlotte's point?
Yeah, I mean, I agree. I mean, we need a radical transformation of the economy. We need disruption. We need I don't like this word, but revolutionary, solutions, and that can, and I think with the COVID crisis and the theme of this series of conferences, we need really a new economy to emerge as well. And what is for me key in this context is really to support new entrepreneurs, a new generation of companies that are developing really meaningful and ambitious business model. Just as an example, over the past 20 years, we have really seen the renewable energy sector moving from a niche, market with small operators to an international sector, global sector with very big operators, companies that are able to really change the energy mix in many countries at scale. And I think in this nature-based solution, land use sector, there is definitely on the ground a new generation of companies, of entrepreneurs that have strong ambition. And we need to, meeting global objectives goes along with helping these companies develop and become major and big companies, by the way, that can then, take market shares of others that maybe, stranded assets, or like in the energy sector, where renewable energy companies have taken the market shares of fossil fuel companies, or there is really a transformation of the economy that needs to happen to meet these objectives.
And Vidya, obviously building on on these topics, you sort of kicked us off with the concept of a pathway to scale. I'm obviously appreciating that these are one type. But what are some of one type of model kind of towards these broader goals? What are some of your thoughts on the scale question?
Well, I'll perhaps give it a different term to new economy and call it new capitalism. And I think it's required with a sense of urgency as far as nature-based or natural climate solutions are concerned. And that said, it needs very strong partnership between between private and civil society sectors. So these three areas is what is required to give us the momentum. 2030 is around the corner, and anything that requires behavior change or massive change in adoption from the farming community will require time and will require that evidence base for them to convert.
Great. So to round us out, I want to just do a quick fire. One actionable. So the audience right now is saying, I've learned a little bit about this, interested in figuring out more, possibly putting nature-based climate solutions into my portfolio. What is one takeaway you'd want folks to walk away with when they think more about, how to go about taking this first step in this direction? Vidya, I'm going to start with you, and we're just going to go around real quick.
I think the first step is to really understand the stakeholder that you're working with and the ecosystem, and start experimenting with what works. It could already be in a slightly more advanced stage, or pick it up where it is right now. Get the right kind of capital aligned towards that, and start experimenting projects. Get the right organizations on board, and then be able to run with it.
Great, Gautier, over to you.
Yeah, I think what is really key in this sector is to work indeed in partnership with many stakeholders, and we see this new also coalitions of public, private, and civil society actors working together, sharing expertise. These are complex topics requiring a holistic approach, and working in coalition with public, private, civil society actors is a success factor, definitely.
Thank you. And Charlotte, to close this out.
I mean, a big ditto to Vidya and Gautier on the importance of the whole economy to participate in this transformation of the economy, whether that's civil society, government, regulators, but also investors. And I think maybe I'll end with a call to action to all of us to lean in. And really commit to the world that we need to live in and invest into that world. It's not easy. It can be scary. There are novel risks, kind of definitionally, to doing something new, and that's okay. The old way got us where we are today. We need a new way to take us where we need to go. And so please, come on in with us. The water's fine. And thank you for being part of this conversation.
Thanks, Charlotte. And thanks to everyone for joining this breakout session. And thank you very much to our wonderful speakers. I just want to say a quick few words. Next up on the program is a fireside chat with Cardinal Peter Turkson, a dicastery to the promotion of integral human development. He's inspired young and old to take urgent action for our future, and he brings a welcome message of hope and promise. So you don't want to miss this. So I invite everyone to return to the main webinar room. You'll find the link to the main webinar in the chat box. And of course, at any time, if you lose track of how to access the session, you can find the links in the next normal now registration confirmation email. Again, thanks very much to everyone and our speakers.
Thank
you.